The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I want to speak about USD JPY. Now, why do I want to speak about it? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just broken above a very strong level of previous monthly resistance here, again resistance here, again resistance here, again here. However, the market last month just created a break and close above this resistance. So now all this previous resistance is now turned support here, and what we can expect is for the market to retest this previous resistance turn support and start a potential rejection higher, which is in fact exactly what the market has been doing here. Dropping down on the weekly time frame, what we can see is that here in the weekly, the market has just tested previous weekly resistance, turned support at this level, and as we have tested the zone and started to reject it to the upside, we can expect more continuation to the upside, possibly even for the creation of a new weekly higher high. So basically a completion of this weekly impulse correction and impulse pattern to the upside. In general, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market retraced exactly the zone that is in between the 0.618 and 0.786 of the Fibonacci taken on this weekly impulse, which is a quite strong support and demand area that we did expect the market to reject to the upside, possibly even for the creation of a new weekly higher high. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now here in the daily time frame, we can see how the market has just broken above a quite important structure level. In fact, this zone was acting as resistance here. The market has just broken above it. So now this previous resistance is turned support and demand here. And what we can expect is a retest of this previous resistance turned support before that getting a potential rejection higher. Now, in general, as we said earlier, also on the weekly, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements currently lining up exactly with the previous resistance turn support, creating a very strong demand area that we could definitely expect this market to first test and then potentially reject to the upside. So this area here is definitely an area of interest for this market. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, we can see how we went from having minus 52k net positions down to having minus 68k net positions. So we're continuing to getting a bearish, more bearish and more bearish as we keep going. Currently, we're sitting with 84.1k short positions from an institutional perspective, with only 15.8k longs. So the JPY is pretty bearish, which means that USD JPY, if it retraces to this demand and support area, could easily get rejected to the upside. So if we will actually have a correction to this area inside of here, the way in which we will be approaching this with students is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes. So 4 hour and lower. Therefore, with students inside of here, we would be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bullish to a bearish to bullish market and provide to us one of our valid entries, at that point, we would be looking for this potential long with a good risk to reward and good probabilities at that point for the move to the upside and completion of this impulse correction and impulse pattern to the upside. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.